The story seems to be the same everywhere, Mr. Kapoor. The demand trends are very strong, but margin pressures have kicked in and attrition is high. For your own company, year-on-year revenue growth rate is at 18%. You've said that you're witnessing an increased momentum in all the new deals that are coming through. Can you give us a broad range of what the full-year growth could look like? I mean, many companies, many of your peers have raised their full-year guidance as well.
Yeah. As a policy, Sonia, we don't give the guidance, but looking at the momentum, looking at what we have done in the Q1 and Q2, it is very clear that we will be delivering very good performance in this year, much better than that we thought in the beginning of the year. It definitely is going to be better than the mid-teen numbers.
Definitely better than the mid-teen number, all right. So that piece seems to be working well. Now let's talk about the pressure points for the industry and for your company, right? Margins are down 100 basis points quarter on quarter. Can you tell us what the impact of the wage hikes have been on the margins, and what kind of margin levers do you have to offset the kind of pressure that you're facing?
So most of the impact that is coming, it is actually because of the wage hike, and some part I can blame it on the attrition that is there in the industry. But well, when we have good momentum in the industry, the attrition is bound to go higher. I believe that we are addressing the attrition in multiple ways, so that one, that we are able to put our talent supply chain in action so that the cost of resources do not go higher. But at the same time, there are multiple other levers that we have started to put in place, where we are looking at how do we get better price for our services. Because the time is gone when we used to ask for the price for a resource for their skill. It is the time when we go to the market and really present the value proposition and ask the price for the value that we deliver. So I think there is a big shift that is happening, and I'm very happy that this is the time that we are seeing in the IT industry, because this is going to change the dynamics between the clients and us, that we can go and ask for the price for the value that we deliver rather than the resources that we put in front of them. So I think those are the levers that we are applying, and I believe that it is working positively already for last 1 month, and I definitely see that in this quarter it should give us the benefit, because those conversations are being seen as very positive by our clients as well.
Mr. Kapoor, good morning. A couple of questions. For the full year, margins will be around 15%?
Oh yes, absolutely. That's the commitment that I have always said, that we will continue to deliver more than 15% margins.
Can you talk to us a little bit about deal pipeline? I mean, improved sequentially, but was down more than 10% on a year-on-year, same period last year. How are things looking from here out?
Correct. See, there will be always some variations that will happen because of the nature of the business. If you're doing a lot of renewal, suddenly the deal wins will look much higher. But what we have to look at very carefully is the deal wins need to be determined by the new business that we win. We are growing the new business and the new deals sequentially very, very well. And I think that is very, very encouraging. At the same time, in this year, there is a lot of pent-up demand that is coming from the previous year. And the pent-up demand is always in the form of the project. So the projects are not going to show you a long-term revenue. Hence, the revenue may look smaller, but for the ACV or the annual revenue perspective, it will always be higher than the total contracted value. So from that perspective, I believe it is positive. I don't think that I should be too worried about the variation in the number that happen quarter to quarter.
So, all right, but just for the benefit of your viewers, what kind of deal win run rate can you expect? I mean, the wins are very strong. Even in this quarter, I was looking at the overall momentum, $153 million last quarter, $140 million this quarter, the new deal wins at $104 million. What kind of sustainable run rate do you see over the next few quarters?
So I believe this is a very good sustainable run rate where we are right now. I think that if we continue to deliver the newer wins in this range, I believe that it should take us to where we are already planning to get the mid-teen growth for the year.
Okay, all right. We will leave it at that. All the best. Thanks a lot for joining us.